First, really quickly, if you haven't signed up for our tax break secrets for real estate success yet, we already have 60 people registered. Not only should it be valuable for you, it's something that you can duplicate to help your clients as well. It was a quiet news week, but there were a few things worth noting. In the housing market, we saw existing home sales close out last month stronger than expected, and that was even during the slower winter season. Homes are staying on the market a little longer, about 35 days on average, but this is still a very quick turnaround time, and homes priced correctly seem to be moving much quicker than that. Would love to know what's going on in your market. CoreLogic's rent index showed that new rents are actually starting to decline, while blended rates, which is new and renewal leases, are slowing down as well. And this is good news for inflation because housing costs in official reports are finally starting to reflect these real-time drops, although we've still got a long way to catch up. And as always, when inflation moves, mortgage rates follow that. The University of Michigan gets a consumer sentiment survey, and it showed almost half of the respondents were expecting for unemployment to rise this year. And a cooling labor market should help mortgage rates move lower. Initial unemployment claims did tick up slightly, and continuing claims reached their highest level since late 2021. And as we've been talking about, it's becoming harder for people to find new jobs after losing theirs. Rising credit card debt is a big concern, with more Americans making only minimum payments. It's really obvious that households are feeling the financial pressure, and that will eventually lead to a slowing in the economy, which again should help mortgage rates. On the other side of things, though, the Congressional Budget Office did report that our debt, the U.S.'s debt that is expected to grow substantially over the next decade, and this does increase the Treasury supply, which can push mortgage rates higher. Not good for us. But next week we're going to get the PCE inflation report, which is what the Fed watches most carefully, and we'll also get housing starts as well as the Fed's first meeting of the year, followed by their press conference and the Q&A with Jerome Powell. These will provide some clear direction for where rates are headed. The cooling labor market that we talked about earlier, as well as easing rent prices, does make me optimistic, but the financial challenges like rising debt and unknown global events, including things like proposed tariffs, might keep rates from dropping significantly in the near term. But stay tuned. I'll see you next Friday. Have a great weekend.